Let's move to the next part, unincorporated partnership. As I already mentioned, this is the return, corporate tax return. I took this question or this point from the corporate tax return. The corporate tax return mostly, maybe I expect the people already seen, but even you not seen, you might go to the Protex e-learning online, and I already uploaded the one demo video over there in which you understand what are the step is part of the corporate tax return. That also important. You might seen from your company corporate tax return template, or maybe from the FT also uploaded the return template, or you can go over there on the Protex e-learning and you can go through. And I raised the question I took the question from the return and added over there for better understanding, and I shared the video on the YouTube. So let's understand this part. So this is the while filing the first return, they will ask this question: is the taxable person a partner in unincorporated partnership? If you say no, it will move forward. What if the person is already, even the natural person as a sole establishment or partnership, or even the juridical person, they might have the joint venture with another juridical person. So they also fall under unincorporated business. So if you're saying the yes, so the here there you have to put the TRN. This is the point I want to share with you guys. If you say you are part of unincorporated business as part of natural person or as part of the juridical person, they have the joint venture with another business, but that is not the limited liability company. Mostly we call the JV. Many multinational company, they have the joint venture, normally we call the JV and the UE, to operate on project base, on the product base, or many possibilities that if we talk about the business vehicle. So again, the concept, what is the objective and which vehicle they will use. So one of the vehicle they will use on unincorporated partnership, they will make a joint venture. So then that here in your return, as your company or you are part of another unincorporated partnership, so you have to add the TRN, because when you pay the tax on that income, and you have to disclose during in this return also, because that will be not subject to taxable under this return, because you are part, you already submitted that taxation. Here you will give me the just the information. Okay, this is the you are part of the unincorporated partnership, but parallel they will ask you further information in the second part of the return. So hope this point is clear. Here I added some points for better understanding, but we already discussed all these points. If you guys want to read, so please take few minutes and read this point. Let's move to the next point, because this is all the point that we already discussed. Early in previous slide, we are mentioning when you put the unincorporated partnership TRN, because you are part of that, so he will ask you further, because based on that, this tab will be open and return. If there you mention the no, so this questionnaire will not be open. If you mention yes, you added the TRN, then you have to, this field will be activated, and this field activated where? Under the return section 4. So the reading is like that. If we say the yes, this section 4 accounting adjustment and the exempt income will be added over there. Now here is, this is the question. The corporate tax, if they derive the accounting profit from the unincorporated partnership that are treated as a separate taxable person, you have to fill up this question also, give the information. So why I'm linking the relevant, because I will try my level best to add the relevant tax, corporate tax return The relevant question here on the relevant section or the relevant area that you able to integrate with the corporate tax return. Our primary objective to go through the tax series, enable ourselves or skill ourselves to understand the corporate tax return, prepare our books of account as per the corporate tax return, and to file the return. So inshallah, by continuing this tax series, you able to do all this activity. So if we mention over here is no, so no further implication. But if we selected the mention yes, so then further section of that will be open. What are the further section? As we mentioned, we will discussing these points in detail when we are discussing the unincorporated partnership. Yes, we will understand and we will make some example for our to refine our understanding in this regard. So based on our shareholding, if we already mentioned yes, we have to fill up all this information. Accounting net profit derived from the partnership that treated as a separate juridical person. If you guys notice here the net profit, they are interested to us, they are keen to take the information. During the first return, there is a transition period also. You have to give them the opening balance also. What is the opening balance? If you're gonna file the return for 2024, so they will ask the opening balance of 2024 also, because you will give the closing balance of 2024, but the opening balance of 2024 also you have to put. That will be for better understanding the closing balance of last year, last tax accounting period, that is 2023. Because such balances, they might have some impact that future will be, you will reclaim or you will put them in front of in return. So then FTA will recall and say, okay, earlier information you disclosed to us this, so we will treat according to this. If any information is changed, so they will ask the further documentation, or accordingly they will do the needful. Here the important part, we have to in our accounting system, so we have to make the separate line item or chart of account where we understand. Because if you make the unincorporated partnership only, if you have multiple unincorporated businesses, if you make only the one account and you keep putting profit and loss, it will give you net off. But if you make the two chart of account line item, then it will give you the one for the net profit, another is the net losses. This is your convenience. You might make the two line item, and that system will give you the understanding while from the accounting system, and it will be just easy to fill the corporate tax return. Or the other way, you can download in the same ledger and split into and identify how much the losses and profit. But FTA is very keen on the different area of the return. Wherever you say the loss and the unrealized loss and unrealized exchange loss also, they will ask the net unrealized profit, unrealized losses also. They will not take the net figure. They will take the breakup also. Here, the another next point, the gain on the transfer or sale or the other disposal of interest in the unincorporated partnership. Now we are familiar with the capital gain or capital loss. This is the income part. This is the capital gain. Currently, there is a whatever the income is coming, that will be treated under the same as the income tax. There is no separate capital gain or tax that normally in other jurisdiction, that normally as part of the ACCA, as part of ICAW, we know the UK taxation is much better. As part of study, I believe most of the people, they go through that taxation, so they understand what is the corporate tax. Or even the other part of the world we belong, maybe India, Pakistan, or the another European country, they also have the similar concept. Then the percentage of the taxation may differ, but the basic concept will remain same. The UAE corporate tax, they're taken from the Netherlands taxation, the main theme, the main structure, but On top of that, they made some changes or modification to refine that. Hope this point is importance of the unincorporated business in the return is understandable for you guys.